All right, we are back with another episode of the Real Estate Investing Club. I hope you guys are having a great day. It is October 11th, nice and chilly outside. I think this is the first time I've worn a coat inside for a while, so I'm happy about it because I like cold weather. It's a good day for a second reason. We got Justin Goodin on the podcast with us from Goodin Development. Justin does multifamily development out in Indy, and so should be a lot of wisdom to gain here. Justin, thanks for hopping on the show.
Yeah, thanks for having me.
Absolutely. I told you right before we got on here, we always like starting with stories, hear how people got to where they are. So why don't you take us to the beginning of your story in real estate and just let us know how'd you get here?
Yeah, of course. Well, like you mentioned, yeah, I'm born and raised in Indianapolis, Indiana. I live here now currently with my wife and two dogs. And I got started in real estate like most people, and that's with residential houses, fix and flips, and things like that. So I started doing that while I was going through business school, where I studied finance and supply chain management. And I was looking for other ways to generate passive income. And like most people, I stumbled upon real estate and single family houses and fix and flips being a low barrier to entry and usually a way that people see a way to get started in real estate. Partly because I think as a society, we're trained to start small, think small, and therefore we think single family investing is the right path for us to get into. And absolutely nothing wrong with single family, but I quickly dove into fix and flips and rentals. Quickly found out it was not passive. It took up a lot of my time, and it's just not as lucrative as some of these TV shows make it out to be. So I was
Well,
doing this
depending on
like
when you're doing it, if you're doing it in 2018 to 2021, it is as lucrative. But otherwise,
yeah,
yeah,
it can be sure.
normal cycle is definitely not. Keep going. Sorry, I jumped in.
Yeah, like so I was doing that through business school, graduated, and knew I wanted to get into commercial real estate. I got that idea actually from one of these houses that I was buying. This investor that I was buying from, at the time I really didn't know what I was doing, didn't have a lot of knowledge in real estate. So one of the obvious questions that I would ask them is, why are you selling this property? And he mentioned that he was liquidating all his assets to go and invest in apartment buildings.
Hmm.
And at the time, I had no idea how he was going to do that, what that entailed, but he was also another younger guy like myself, also in college. So I thought, just going to buy apartments was just crazy and had no idea how I was going to do that. But, quickly started researching about apartment investing, commercial real estate, using partners and investors to leverage your business and scale your business. And after business school, started working for a commercial multifamily bridge lender as an underwriter. And that like really opened my eyes to the benefits of commercial real estate and apartment investing, because as an underwriter, you see basically everything about these deals. You see the borrower's tax returns, how they're not paying taxes. You see their income statements, their balance sheets, and all these things kind of, made me want to go into commercial real estate even more. So fast forward, I left my W-2 job about 4 years ago to pursue real estate full time. In the past 4 years, we've been buying existing multifamily assets in and around Midwest, scaled up to around 500 multifamily units. And last year, we have transitioned our business plan into solely focusing on ground up multifamily development here in Indiana. And plenty of reasons why we went to multifamily development. Happy to expand upon that. But that's the journey, to say the least, of how I've, started from buying a house into doing ground up development deals here now.
Yeah. Yeah, I definitely agree that you're right that people tell us that we need to start small and go big. And I agree that that is not the way to do it, especially in real estate. It you feel like you're safer when you're buying smaller properties, but especially on the commercial side, you are not safer if you have a lower gross revenue. That means if you have any mistake in the property, all of your profit's going to be gone. And your NOI is going to be nothing, and you're not going to be able to sell it. And so, going bigger, especially on the commercial side, is much safer than going smaller. Um, And it's cool that you got started, your, I guess your W-2 career got started as an underwriter. I feel like that is a perfect stepping stone to get into commercial because really you're just looking at P&Ls all
Yes,
day. And I mean, there's probably more to it than that, but but you get subjected to a lot of the P&Ls of all these properties. So you get to see kind of how they look, how they're run, how they're supposed to be run, and really get a good um, subjection to that. So
exactly.
once you take us to actually, before we get into the development side, let's go a little bit into the fix and flips or the rehabs you guys were doing on the multifamily. Um, how did you get the first deal? And once you left your W-2, what was that process like?
Great question. So my first commercial multifamily deal was a 29 unit on the west side of Indianapolis. And this was a deal that I found from doing direct mailers or, direct mail campaigns to property owners. And actually found it the same week I left my W-2. So that's actually just just a amazing coincidence, but it kind of just propelled me into real estate at the best time. So yeah, found this off market deal, direct to seller, brought in another partner to help with the experience, track record, and qualify for the bank loan we use. Raised
And
around
how'd you find your partner?
500,000. A networking event here
Hmm,
in Indianapolis, another like local meetup, and knew he'd be a great partner to work with.
perfect. So you started
Yeah,
29. Do you feel like that was a good size to start with, or do you wish you had started even bigger than that?
I don't. I mean, I feel like it's a great size to get started in. I think people when they want to get into commercial real estate or multifamily, bigger always has more economy of scale, has more benefits along that. But it's all about finding the right deal and the percentage of ownership you're going to have in that
Mm-hmm.
deal. I mean, let's face
Mm-hmm.
it, like we're all here to make money, build financial freedom, leave our W-2s. It's fine if you want to go, close on a 200 unit on your first deal, but some people like only own like a very small percentage in those kind of properties. So it depends on what you want to do, but yeah, to answer your question, I feel like a 29 unit that we actually turned into a 33 unit. Happy to chat about that more, but just me and that one other partner was, an awesome stepping stone into multifamily.
Interesting. So you guys added multifamily is one of the few asset classes that you rarely hear of the reposition, the value add being additional units. Like in self storage and in mobile home parks, RV parks, the stuff that I do, a lot of the times you're adding new, additional units in order to increase the value. But multifamily, for some reason, that's never the case. You're never adding more units. So take me a little bit into that. How were you guys able to add more units? Was a small or a bigger parcel or what was the case around that?
Yeah. So, I mean, this deal was basically a perfect value add type deal. All the components you would think about on a, value add deal. I mean, this property had it. So, long time mom and pop owner. The guy actually lived on site in one of the units.
Oh,
So that was
geez.
already a unit that we could be rented out and then collect more income from. Gravel parking lot looked absolutely terrible on the outside. I'll be the first one to say that. And they weren't billing back utilities. The rents were substantially under market. And yes, like in the actual building, there was a large space that had walls, windows. It was just for whatever reason not being utilized by that owner. It was
Hmm.
a blank space, part of the building. And we saw that as a tremendous opportunity to build four more units, increase the NOI, and as you know, the value of the property.
Nice. I love it. So let's fast forward a little bit. You From that 29 units, it sounds like you guys added another 470 or so odd units. And then you got into development. That is one thing that a lot of people kind of shy away from because there's so much work that's involved in it, but there's also a great reward for it. Why did you choose to do development and go away from just the repositioning of multifamily?
Great question. So, a few different reasons. I mean, one is that I feel like the value add multifamily space is so inflated and competitive. Everybody and their brother is out there looking for value add multifamily in all these hot markets that we were looking in. So, I was just analyzing deal after deal, losing deal after deal. And even like when I find an awesome opportunity from, let's say, a broker that's on the market, even in that chance that I find an awesome deal, I'm competing against 20, 30 other buyers that also want that deal.
Yeah.
So for me, the competition in the value add space is just significant. And I think I'll be able to do more deals and more volume on the development side. Like you mentioned, there's a lot more upfront work that's involved with the development. And I think, fewer investors are willing to do that, which I think leads, to more opportunity for me.
Yep. Yeah, and that is the benefit of the work. In fact, somebody that I know, he's in the self storage space, and he only does development in difficult markets. Essentially, Seattle is one of those because there's so much red tape, and he sees that as his competitive advantage. He's willing to take the hit in the face that it takes to get these buildings created. And that's why he does it, because it makes everybody else say, no, I don't want to do this. It's way too much work. It's way too much headache. But
Yes.
if that barrier of entry is so high, that means that there is also opportunity, because there's so fewer people are willing to do that. Um, Development, though, in today's day and age is well, I don't do development. I'm going to put that out there out front. So I'm talking out of my ass a little bit, but I've heard that because of interest rates and because of material costs, it doesn't pencil as well. Is that the case that you're finding in Indiana, or what? How is the underwriting looking for development?
100%. But it's also similar like that on the value add existing space. I mean, if you go talk to all these other investors, they're saying the same thing. Interest rates are high. It's a competitive market. Prices are still high. It's tough to find a good deal no matter what niche or what market you're in. But yeah, to answer your question, it's extremely difficult. And development deals are basically impossible to get to pencil out. At least like with the quality of product that we're building. We're just for reference, we're building Class A, mixed use, ground up multifamily
Mixed use.
development,
Okay.
very high end type product. I mean, not like super luxury, but absolutely high quality and A class. And yes, it's basically impossible to get these deals to pencil out on paper unless there's some sort of municipal incentive. And that
Mm,
is when the
okay.
city or town wants to quite literally invest in your project and therefore lowers your basis on the deal. So, the project might cost you $10 million dollars to build, like the total project cost. When it's all said and done, it might be worth 7 million, per example. So, the value is based on the rents, how much the property is producing in income. The bank is going to do an appraisal. They'll look at the stabilized value and then say, hey, it's going to be worth this when you're done, 7 million. It might cost us to build the project, 10 million. So we work with cities and towns to where they want to fill that financial gap to
Hmm.
make it financially feasible for us. So a little bit of
Interesting.
competitive advantage and unique strategy. Again, I haven't heard of the things like that being done on the existing value add space, but that's how at least we are continuing to do deals, at least in a difficult competitive market.
Interesting. Yeah, I haven't heard of people doing that. So you go to the municipality and you say, "Hey, we want to do this project. Are you willing to basically give us a profit on this deal? Because currently it won't be profitable for us, and so we're not willing to do it. I know you guys need units in this area. Are you willing to fill that gap?" And it sounds like municipalities say yes.
That's a good way to put it. I mean, yeah, we are proposing a very compelling project to the city or town that we're going into. Yes, you said it, they need housing. Many different cities and towns are in extreme demand for housing. And also, it's not just providing housing to the area, it's creating jobs, it's bringing businesses into the area. So, because we're doing that mixed use component, meaning there's some sort of commercial or retail on the bottom or incorporated into the project, it's more than just a boring apartment complex. It's bringing jobs into the area, businesses, and more of a thriving community that any city or town is going to want in their area. So they're willing to incentivize that.
Yeah.
Cities and towns that recognize there's a financial gap, they recognize that in order to thrive and stay ahead, they need to work with the developers to get these projects done.
Yeah, no, it makes complete sense to me. I'm the process though, I'm sure is interesting. How so let's use your
Very.
example. You said, yeah, it takes about $10 million to build this theoretical project. And it's only going to be worth seven. And so how do you propose the profit that you guys are going to be generating from this project to the city when they're going to be making up the difference? So if it's only worth seven, do you say that we want 10%? So $1 million, they'll put 4 million into it to make it an $11 million value essentially for you guys.
So that municipal incentive that they're providing to the project does not make us any richer or not. It doesn't go into our pockets at all. It is simply filling the financial gap of where it costs us to build and what it's worth when it's done. It
So
doesn't
it's a
go into our
wash.
profits at all. It's not a wash. It makes the project financially feasible, or else we would be building it for 10 million and then selling it for 7 million.
Right.
And no developer would ever build a project and sell it for a loss. It's
Right.
simply just filling the financial gap. We take a development fee, a market development fee between 4 and 5%. Um, that's like pretty standard in the development world, but that incentive is not going into our pockets whatsoever.
Well, yeah, I mean, I understand that, but they are providing money to the project. And so, and if they had not done that, then you would not do the project because it wouldn't make you
Correct.
profitable. There's nothing wrong with making profit. Profits, that's why we do projects, because they create profit. So, the city is
Correct.
putting money into this, and so they are they are filling the gap between the development cost and the market value. So they will, in your
Exactly.
example, $7 million is what it will be worth when it's completed. It takes 10 million. So they'll give you up to $3 million to they'll basically cover the construction costs. Is that accurate?
Who covers the financial gap that it takes to make it market feasible? Correct.
And is that based on the time of sale, or is that negotiated up front?
Is what the value you mean?
Yeah, because in our, like, we're just sticking with our example. In our example, there's takes 10 million to develop the project. The current
Correct.
market value is seven. If between the time that get the engineering drawings done and then you cut the red tape, or the open the facility, between that time, let's just say in some crazy world it increases in value by $4 million, and so now it's worth $11 million. So they obviously wouldn't be providing the incentive in that situation. So it sounds like is the amount that the city is contributing to this project, is that negotiated at the beginning or when it's actually
Yes,
sold?
determine up front. Determine up
Interesting.
front because we need the capital in the beginning to build the project. So yeah, it's based off the appraisal we do in the beginning.
Huh. Okay. Um, cool. Yeah, that's a very unique concept. It's not something a lot of people do. Obviously, there's a need for it because a lot of cities and towns out there, they need units, they need places for people to work, and so it is a necessary thing. So you guys are doing good work. I'm going to move us on to the quick question round. This is starts out with education. Could be any form, could be movies, could be books, could be conferences, mentorship programs, whatever. I just need two recommendations, one for general life wisdom and then one for real estate.
One for real estate is probably going to be, I mean, just YouTube, books, things like that. Just all these resources out there. Exactly what I did in the beginning, and what I continue to do is just be a student and absorb as much information as you can. The second one, I guess, would just be different mentors, and I found mentors extremely valuable, not only for business, real
So give a
estate, but also like
specific example. If there's a book, give that book, or if there's like a mentorship program that you've joined, give them a shout out.
yeah, I can't recommend any kind of programs out there, but I would just say, research in your own local area. If you can find somebody in your city that's doing what you want to do and you can connect with them and learn from them, that, in my opinion, is going to be the most valuable thing you can do more than any kind of other group, in my opinion. But that's just what I've done.
Cool, love it. All right, moving on to the next question. This is for your younger self. Let's go back to the Justin who was just graduating college. Go back to him, look him in the eye, give him one piece of advice moving forward.
So I would say, start your own business and then create a thought leadership platform or platforms. But I would do something to, get your name and your brand out there, whether that's a Facebook group, a podcast like this, meet up in your own local city, but do things to get your brand awareness out there and to show that, you're an expert in this niche and give people reason to listen to you.
All right. Next question is about the US. It's a big place. There is a lot of opportunity out there. Give me the single metro you're most excited about investing in today.
Indianapolis, Indiana.
Indy,
Indiana's always
nice.
been a very stable, consistent market, very landlord, very business friendly, affordable place to live. I mean, Indianapolis just has a ton of great metrics to love.
Yep. Yeah, Indy's a great metro for sure. Next question is about finding the deal. It all starts with getting in contact with the seller and penning that purchase agreement. So, what is your favorite way to generate leads and find new deals?
I guess like with me being on the development side, I'm looking to, create new projects. So my best resource for doing that is going and talking with different municipalities, cities, towns about, what they want, what their goals are, and, figuring out a potential project to make sense for them.
Awesome. Next question is about lessons learned. Not every deal that we get into goes the way we expect it. In fact, most of the time something goes wrong and we get to learn a lesson. So, what was a deal that went a little bit sideways for you? And then what was the lesson you pulled from it?
Yeah, probably on that 33 unit that I mentioned in the beginning. So I talked about like that we're building those four brand new units, but I had no idea in the beginning that there was a lot of different like red tape and permitting process and how long that would take. That took us, I want to say, around 12 months longer than expected. So it kind of delayed some of our, projections in the deal just because it took us longer to get those four units online. So that's definitely a mistake, but luckily it worked out okay and still a very strong performing deal even today. That's something I wish I would have known in the beginning is more about the permitting process and the actual process working with the city to build new units.
Yeah. Yeah. Depending on the city you're in, permitting can just take so long. It's ridiculous.
Yes,
And it's not
right.
something you realize is going to be an issue when you get started. But I don't know. Seattle for sure is just insane. It's like you guys just get your
I
shit
bet.
together. Just get somebody out here and take a look at this. All right. Next question is about raising capital. It does take money to make money in real estate. So, what's your favorite way to raise capital?
Social media, LinkedIn and Facebook. Those are the two platforms that I focus on. I don't try to be an expert in every single different platform out there, but I've had a lot of success with LinkedIn and Facebook.
Perfect. All right, that leads us to the last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. It's a two-parter. Where can they find you, and then what can they expect when they reach out?
You can find me at goodindevelopment.com and on LinkedIn at Justin Goodin. And yeah, if you want to reach out and talk about multifamily development or how I got started in real estate more in depth, happy to share some tips, strategies, and things that I did in the beginning. Or if you're interested in passively investing in one of our future projects, you can just go to goodindevelopment.com and there's a simple invest with us button on the top right-hand corner of the screen.
Perfect. I'll put that link in the show notes. So if you guys want to reach out to Justin, just click a little more in the description. It'll pull down that full description, and there you can find his links. All right, man. That wraps it up. Thank you very much for hopping on the show.
Cool. Thanks, Gabe.
Absolutely. For everybody who's with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe at the realestateinvestingclub.com. If you guys want to support the show, just give us a like, subscribe, all that jazz. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode.